Good morning, everybody, and welcome to the Daily Energy Markets podcast. We have Brent crude oil trading, knocking on the door of $70 a barrel again. Its head must be getting sore with sort of occasional bumps and $70 lumps as it bounces like a ping pong between 65 and 70, depending on the dramatic news headlines that are sort of coming into play. And of course, there are lots this week. With the return, it's the summertime. So of course, in the summertime, you've got the new franchise movies are back. This episode 6 of Avengers or whatever the latest Tom Cruise or Brad Pitt is, the same movie but a reincarnation. If he's not this time in an airplane, he must be in a car. It's a bit like that with OPEC Plus and with the tariffs. Have we seen this tariff movie before? Should oil markets really care this time? Oh, this time I'm serious. This time it's different. Is that the way it goes? Let's kick off with Mike McGlone, senior commodity strategist at Bloomberg Intelligence. He's our tariff correspondent. We've got America, India, and China on the podcast this morning. So, my God, we're covered from all of the massive actors in the world. So, you today are the representatives of the big 10,000 pound gorillas. Mike McGlone, you're the first up. Is it serious this time? Is this the one? Again, we've pushed the deadline to the 1st of August. Your thoughts on the significance of the return of the tariffs?
Yeah, the tariffs are, I think, as significant now as death and taxes. They're coming. They'll be significant. It was kind of the premise that Mr. Trump started decades ago. And Mr. Lighthizer pointed out, former trade representative in his book, No Trade is Free. And the only thing that really lightened up on tariffs early in the year was when the US stock market dropped 20%. Then the Trump administration pulled back for 90 days. Now they're coming on hard. Stocks are at record highs. He's completely emboldened to do what he said he's been doing forever. And it's just a matter of how high and how far and how much pain it'll take. So yes, the market should care. We have tilted over to crude oil. Crude oil is in a bear market. We've had this recent bounce on a supply scare, and all it did is embolden the responsive sellers to come out and sell, and the hedgers who can hedge their production to sell. You can see that in the backwardation, and I just don't see what stops it. So it looks like a pretty good peak around $80 a barrel, and Brent, and it's 69 now. I just have to point out we're going back to the average price from 2019, which was around $64 a barrel. It's just a matter of time we settle in and stay below that level. You basically have to do that to get below the cost of production. In the US, that's around 50 something dollars a barrel to shut off these excesses of supply and decrease in demand. Now we have demand declining from China, certainly from imports. We have US gasoline demand is stabilized, it's somewhat stagnant at levels below 2019. And supply is increasing, as you see from OPEC. That's just a classic bear market. You get bounces, you sell. It's a question where it ends. And I'll end with this. I think the most significant thing is we're seeing this deflationary forces from crude oil and somewhat inflationary from copper. I think copper is more at risk to tilt towards crude oil. And the number one factor for everything is that buoyant U.S. stock market. So if it gives back a little bit, it'll head lower. And our chief equity strategist, Gina Martin Adams, says her manic mode model is quite extreme, which means the stock market risks are down, which means risks are down for most crude oil and the U.S. stock market.
Narendra Taneja, India's leading energy expert. Narendra, should India be concerned by the return of the tariffs? Is India willing to sort of sell out all of everybody just to keep Trump happy? Your thoughts on the return of tariffs and how significant they are for India and then for the energy markets?
Well, you see, you have no option. I mean, we have a close economic ties with the United States. United States is an important strategic partner. And when you look at the geopolitical chess, I mean, we need the United States and probably the US needs India as far as Indo-Pacific and China, are concerned. But when it comes to tariff, I mean, you have no alternative but to deal with it. And that's precisely what we are trying to do. We are negotiating a trade deal with the United States, and hopefully we will be able to conclude it within the next couple of weeks, if not sooner. And let's see what comes out of it. But of course, President Trump is not an easy customer. He's a very difficult person to deal with. He has his own ideas, which may or may not be, based on sound economic fundamentals. But then, you have no alternative just to deal with him. That's precisely what Japan is trying. That's precisely what other countries in our part of the world are trying to do. But the question is that, in the process, we have started now engaging with other economic partners, including China. China may not be our great friend, but we are kind of reworking our economic relationship, with China as a part of, a hedging strategy, and similarly going for other economies of the world, including the European Union. So that's precisely what alternative that we have. On the one hand,
what about the extra threat from Trump? It's not only the bilateral, you need to deal with tariffs, but now he's threatening the BRICS. Any dealing with the BRICS, he wants to kill the BRICS. Your thoughts on that?
Well, you see, can he kill BRICS? You see, BRICS is a coalition. It's not an organization with a permanent secretariat or a constitution. It's a movement. So can you kill a movement? Can you kill a coalition? And moreover, when you look at the construct of BRICS, you have China on the one hand, then you have Russia, you have India, you have Indonesia, you have Egypt. Egypt and India are not anti-West. India is not anti-West. Other members of the BRICS may be, but India is not. Egypt is not. So Indonesia probably is also not. So the question is that BRICS is a fantastic movement, and I think if you look at it, it represents roughly 45% of the world population, close to 40% of the global GDP, bigger than G7. And I think our whole idea is to build a kind of global order which also works for emerging economies, not only for G7 or the rich countries. So it's a movement. It's going to take time. India is committed to it. China is committed to it. Russia is committed to it. New members like United Arab Emirates are committed to it. And I'm sure it's going to succeed if you see the voices coming out of Brazil, because the summit is going on there, as you know. So President Trump or the United States, for that, many commentators in the West might have, different idea of BRICS. There are many who say it's anti-West. They want to kill it. It's not only President Trump. There are many, including newspapers and social influencer, politicians, so on and so forth. But I think it's misplaced. BRICS is not anti-West. BRICS is a movement basically to make our world even better, even to help emerging economies, to help build a new global world order, which is based more on kind of,
everything that Donald Trump hates. Let's go to China and Victor Yang, senior analyst, JLC Network Technology. Victor, China has made it known quite clearly to countries that are now forced, like Narendra is saying, you've no choice. You've got to deal with the US. You've got to accept Trump's terms. You've got your negotiating power, although, you hope that they're, win-win for China or for US and India or US and Vietnam, whatever it might be. But in a lot of those deals, Victor, the US is trying to cut China out of supply chains, like punishing Vietnam if they channel Chinese goods. Your thoughts of where this is going, this trade war with China? Will China navigate this time?
Well, it's interesting to see that while the United States is trying to cut China out of the system, but as a matter of fact, we can see in the end who is cutting itself out of this system. Globally, China is doing business with more and more countries, and is actually increasing its trade with a lot of countries, including with ASEAN, with India, with with European countries. So actually, particularly recently, the United States has been isolating itself from global trade in many terms. So if this continues, a lot of countries will be pushed away from the United States. That's my view.
And in China, obviously, this tariff story, as I said, we've seen this movie before. It all kicked off in early April. It's been through suspensions and renewals, and now China has a 50% tariff. The US has a 50% tariff on all Chinese goods as an average. China has, I think, 30% tariff on an average on all US goods. Is this from China's perspective, do you think, do they think it is an actual trade war? And do you think, does China think there's a solution to be found? Like Narendra says, India has to do a deal with China or with the US. Does China feel like it has to do a deal with the US, or is this something more existential? There's no end to this eventually.
Well, for now, the United States has a higher tariff on China goods than China does because of the 20% tariff imposed before April. And so the tariff the United States imposed on China goods is higher for now. And for the moment, actually for the past few years too, China's exports to the United States have been mainly low-end products, such as shoes, clothing, a lot of low-end prices without much value-added. Well, and China has been trying to diversify its market to export more to other countries to expand its markets. And at the same time, for imports, has been trying to diversify its imports too, say such as bean from Brazil, particularly this year. So actually, this didn't happen. This didn't begin just in April. Actually, started a few years ago when Donald Trump was president a few years ago, and the country has been upgrading its industry to better push its economy to focus more on high-tech industries and to cut back on those industries with a lot of labor and low value. So this is an ongoing change for China. And the trade war between the United States and China has pushed it to push this to move forward faster in this process. And we do not see an end to the trade war yet. But both sides have something they need from each other. Say
Well, that's
for the
clear.
moment,
Yeah. I mean, there's no doubt they both have they both have something each other wants. Isn't that always the
Yeah.
case with trade? I want access to your market because you've a lot of people that spend money on Barbie dolls and things like that. Mike McGlone, the shock of the year perhaps so far, despite all this trauma, we've seen this movie before. We're 3 months into the sort of this volatility of it. But the predictions of recession, of big economic damage to global economic growth, we haven't really seen the nightmare outcome of this. Are we getting a free pass from all this sort of geopolitical / trade trauma, and that the impact for the economic growth is not going to translate into lower oil consumption, lower energy consumption?
Well, I think, Sean, you well described the current equity market right now. We're going to get a free pass. It's safe. Buy every dip. Market's going to go up, certainly from an U.S. equity standpoint. I think that's going to be proven by the end of the year to be wrong. We do see a clear bear market in crude oil prices. Every bounce is sold. Trends lower. It's down 9% or so on the year, WTI or Brent. But the fact is, this is a paradigm shift in global trade. The rest of the world cannot just indiscriminately export to the U.S. anymore without importing reciprocal amounts of goods. That's just over. So the rest of the world is going to face those pressures. You see that in bond yields in China. I'd like to see Victor's view on that: 1.65% in a 10-year note versus the U.S. at 4.4%. This, to me, reminds me of very much when I started trading JGBs in the 1990s. To me, the market's tilting towards what Japan signaled in the 90s of deflation, certainly from China. And now, as Victor pointed out, China is focusing on the rest of the world to export goods at more deflating prices. Wonderful goods, for instance, great cars, great electric cars, panels, everything that's cheap. And it's very good from an energy standpoint, but it's the deflationary factor that really comes after inflation. I think that's where we're heading now. And the key next shoe to drop is the U.S. stock market to just back up a little bit. And there's your global recession. Because at the highest ever versus the rest of the world's GDP and versus its own GDP or versus market capitalization, that's kind of the it's the elephant in the room of what matters by the end of the year, and our strategies are somewhat negative. So to me, crude oil is stuck in the middle, but crude oil is a deflating commodity. We use less of it every day. We create more of it, particularly in this country. The exports from this country are just hitting new records, certainly if you include Canada. So it's not that profound. It's just you sell rallies in crude oil, you look for where the bottom's going to be, and typically historically, since crude oil peaked in 147 in 2008, every low's been around $40 a barrel, and I expect that to happen potentially by the end of this year.
We have the situation now, Narendra. I think I'm covering the oil markets for 30 years, and two things have happened in the last 3 months of this crazy period that I think I would have bet my house would never have happened. And that is the first one, when Iran started sending missiles at the end of the war with Israel from Iran to Qatar, oil prices started falling, literally when the missiles were in the air. And now OPEC Plus increases supply by a greater amount than the market expected, and raised the OSP selling price to Asian buyers in the same 24 hours. What did prices do? They went up. I mean, what kind of universe are we living in? Is demand still solid? It appears that the Saudis think they can raise their official selling price to Asian buyers. Demand must be solid. No impact from all this trade nonsense. Your thoughts on why that's happening? These things we've never seen before. Increased supply, higher prices.
Well, it's a good question. I mean, there is a kind of course, the general belief across the world that when it comes to oil markets, they're driven mainly by or based mainly on two fundamentals: demand and supply, as everybody knows and talks about, and geopolitics. I mean, geopolitics depends. I mean, people like me, I believe that oil is 80% geopolitics and only 20%, demand and supply. But there is another factor that that we don't see 24 by 7, but we do see occasionally appearing on the horizon. Like you mentioned, when Iranian missiles were going to Qatar, actually oil prices were coming down at that very minute. So who was the actor behind? Why it was happening? So is there any kind of, call it God's hand or call it, some hand? There is another power which is kind of emerges on the surface, plays a very important role, and then disappears to reappear again. I think there is one. It's very difficult. I don't have an evidence, so I don't want to say, all right, this is the power. They are the people. These are the trading houses, or these are the giants, or these are the kind of forces sitting wherever. I can't say that because I don't have any evidence. But when I speak with my friends in the energy circles, many of them are very powerful CEOs. In private, when you talk, they do talk about these things. When you speak with energy diplomats, not only in New Delhi, but in Tokyo or in Vienna or in London and DC and other places, they do talk about it. The power, and sometimes these powers are used even for geopolitical purposes or to resolve a geopolitical turbulence, let's say in Libya or in country X or country Y. So, I mean, there is this third power which plays a very, very important role, very difficult to define it, very difficult to produce evidence, but I remain convinced that there is that power, and that power also plays a role somewhere. Now, I just want to quickly add one thing at the same time. When we talk of, geopolitics and demand supply, another factor is anxiety. The people who sit in front of the computer screen and actually drive the markets, many of them may not be that well versed how, for instance, geopolitics functions, or if the Iranian missiles are going or the jets from Israel are going, actually, should we be worried to, let's say, on the scale of 1 to 10 to 9 or only 1? Is that just geopolitical optic? Many of them are not able to interpret. I interact with some of them in our part of the world, and when you sit down, long conversation with them, it takes you no time to realize actually they don't understand it. They understand only demand and supply.
Victor, we had a very senior Chinese executive on, analyst earlier in the week, who said that the tariffs in a way where could be seen as a blessing in disguise for China, because ultimately they force China is urgency in which to reform from a structural reform from investment economy into a consumption economy. And in either case, he said that China's resilience to this year, that we've got 5% growth easily in the first half, likely to get it in the second half, and that oil demand, oil consumption in China will be 15 million barrels a day this year. No real growth, but no real decline. How do you see the second half for the China GDP and for oil consumption?
Well, for now, we still expect the country's yearly GDP to be about 5%.
Above
And
5%.
above 5%. And for now, we see more stimulus coming from the Chinese government, mainly to first to stimulate consumption, second to boost the development of industries, to focus more on some other industries to drive economic growth other than in the past in labor-intensive industries. So the government is aiming to, say, speed up its industry upgrade. And this is not just happening, actually started a few years ago when Trump started the first trade war with China a few years ago. So this has been going on for a few years, but it's kind of speed up this year. And so we see more contribution from some high-tech industries in the second half of the year.
And from the point of view of oil imports, oil consumption, is
Yeah, we see a rally in June first, and there were kind of worries about supply in the coming months too. And another reason for probably higher imports in June was delayed customs clearance in the previous months, because we had 2 holidays in May, and customs declaration were back to normal in June. And now we had already seen the peak refinery maintenance in the second quarter. So we expect a rebound in the country's refinery operating rate in the second quarter too. So we expect imports to rebound modestly in the second quarter.
And just one more question on that. Is there continued imports of Iranian and Russian sanctioned crude? Is that still an attractive buy for China? And are you also buying for inventories rather than only consumption?
Well, for June and the first few months, there were some for inventories. And as for sanctioned barrels, they were mainly purchased by independent refiners. But they became kind of more cautious in April, May, because of the statements from the United States. And even after Donald Trump said China could continue to buy Iranian crude earlier this month, late last month, I think, and Chinese refiners didn't make much more purchase. So they were still kind of concerned about some supplies, Yeah.
Yeah. Let's go to the survey question, which is where we started this morning. Have we seen this tariff movie before? What does it mean for oil markets this time? Is it bullish? Is it bearish? Is it neutral? We believe all the letters went out, the love letters went out yesterday with the sort of declared tariffs. If you don't do a deal, if you don't make us happy, this is your number you're going to get by August 1st. So rush, 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 and come and make us happy so that you don't get this number. So is this going to be bullish or bearish or neutral for oil prices in the second half of the year? We're knocking our heads on 70 for different reasons. And that's certainly, disruptions in the Red Sea. The Houthis are back attacking ships and so forth. And there seems to be a tightness in the oil markets and some concerns as to why we're seeing prices go to 70. But Mike, I wanted to take the opportunity to get your views on the budget bill that just passed the Congress. There was a lot of goodies in it for the U.S. oil and gas industry. What's your takeaway from that bill? Will we finally see the drill, baby, drill outcome that Trump has wanted, and now the oil industry has received all of these very big deregulation gifts?
Well, I think that's a key point, what you said as far as the bill. The focus of the Trump administration, there's a few focuses, and one of them is lower energy, lower oil prices. And it's going that way. It was a pre-existing trend before he was elected. A lot of the excesses of U.S. supply started during the Obama administration. Now it's just gaining fuel. So what stops it? You also look at declining demand. U.S. now is at a point it has to export its energy and crude oil and natural gas, or we'll have a glut. Same with corn, soybeans, and wheat. So that's the trend, and we still have a strong dollar. It's obviously weakening a little bit. But most of us here are just so sick of it. We're ready. We're done with this beautiful bill. But the key thing, tilting over to what's mattering, what the key thing from the Trump administration is, the Trump administration came into was reelected with the U.S. Exceptional at most extreme level in some measures 100 years, based on U.S. stock market captive GDP. Now it's throwing tariffs in there. And according to some of our analysts, the S&P 500 cost of goods sold, around 40% of that is from imports. Now it's increasing the cost of those imports. It's hitting corporate profits at a time corporate profits estimates were way too high. So the whole tilt is towards lower equities in the U.S. And I don't think the Trump administration, I think they understand the risk. But let's look at the goals here. It's all about midterms next year, a little bit over a year and a half. And, they don't, I think, to get their goals of lower energy prices and lower yields in U.S. bond yields, one key way for that to happen is the U.S. stock market to go down. Remember, 10% of the top 10% of incomes in this country own 80% of the stock market. They typically don't vote for Trump. Then there's the 55% of wage earners, of population who are wage earners. This bill really helped them. No tax on tariffs, on overtime and tips. They're going to be tilting towards Trump if they get the things that he promised them. They don't care about the stock market as much. So it's very political, but we'll see how it works out. In the meantime, it's going to be about the midterms. And if the stock market drops a little bit, actually, that might be good for Mr. Trump's constituents. And it's bad for most commodities, bad for the dollar, and bad for crude oil.
Narendra, we've talked a lot about the issues of the day of the last few months, and obviously in the center of it is the sort of unilateral tariff declaration of the U.S. But I wanted to get your thoughts on, obviously, as you mentioned, India, like most countries, has to fight this fire that's sitting in front of them today. You've no choice, nobody has. But what is the legacy? What do you think is the big geostrategic legacy of this sort of kind of new, as Mike described it, once in 100 years, U.S. exceptionalism on steroids? What do you think the legacy is for countries like India? We've seen, as you've said many times, we don't want Russia to go into the arms of India or into the arms of China, etc., and previous reasons. What do you think the geostrategic legacy here is for other things to happen as a result of this?
Well, this is a very, very interesting question, my dear, because a weak America is not in our interest. A weak America is not in the interest of the world. What President Trump is doing is, essentially helping China. Probably China would have taken another 30 years to become a superpower. But the policies of President Trump is helping China to the extent they might actually emerge as a very big power within the next 15 years. And that's not a good news for many countries around the world, including Japan, India, and even Russia, and Western Europe, of course. So the thing is that it's very short-sighted and is fundamentally destroying many things that the world actually has been used to look upon the United States. Some people even used to feel very proud. Killing institutions, questioning institutions like Harvard, Columbia, Stanford, for that matter, many media establishments too. I think it's not really good. So many people, including many in my part of the world and my country, they're very worried about it. President Trump might be doing some good things, such as drill, baby, drill. India is very happy about it. But at the same time, a weak America, if America grows weak and is growing weaker by week, literally, if you see it very carefully, I mean, the way we look at it, it's not really good for the United States. Inward looking America is a bad news for the whole world, especially for those countries which enjoy strategic relations with the United States, such as Japan, South Korea, Western Europe, India, Australia, New Zealand, and many countries in your part of the world in the Middle East. Is very bad. So I think he probably needs good advisors who understand diplomacy, who understands, strategies, who understand how the world is going to look like in 50 years from now. That said, at the same time, but when you look at the result, what is happening that, there are other aspects. The result is going to be that Europe will emerge as strategically autonomous Europe, not part of the West, but Europe, will emerge as a kind of strong military power, a strong economic power in 20 years from now, and the second largest economy, probably overtaking even China, if they play their cards well. And in the process, we hope that Russia will also emerge, strategically speaking, quite autonomous. And then Japan will have to reconsider whether they should have nuclear weapons or not. And even countries like Australia would have to reconsider all these things. So I think if you look at very carefully, just because the United States under President Trump is not able to see the world today and the world tomorrow, strategically speaking, correctly, the entire world will be paying the price. But above all, the United States people, their institutions, their businesses, their markets are going to pay even the bigger price. And the result will be Indo-Pacific, the entire region we are part of, China is part of, Korea is part of, Australia is part of, Japan is part of, and actually will be pushed into massive geopolitical turbulence, thanks to President Trump.
Victor, thank you for that, Narendra. That's very, very useful and very, very real in the legacy tale of these things. Victor, I wanted to get your thoughts on this. Finally, we got the survey results, of course, come in, which indicates that seeing this tariff movie again is little relevance to the oil markets. Let's see if that is the case. If it damages international trade and global growth, then obviously you would think energy consumption declines. But Victor, the bigger picture here regarding the sort of China's conversion towards a consumption economy, I know that's a big wheel of time thing, but does these events accelerate it? We're seeing, such quiet stimulus policies, as you mentioned there, which went unnoticed, I think, by a lot of people, that China is rewarding new mothers if they have children. There's children benefits for 1 to 3 year olds, encouraging more births in China. The stimulus, any bazooka stimulus could be coming, or we're still going to get these incremental soft side stimulus?
Well, we just see this incremental increase for the moment. And the most important thing is to create more jobs and to increase people's income to, in the end, stimulate consumption, because consumption stimulation will not be sustainable when people's income are not growing. So this is just a short-term strategy. It will not last for long. It will be just making room for, gain some time for the industrial upgrade, to make it more, to make production more valuable, to move up to the value chain in the end. So this in my opinion, this will be just for a short period of time. It will not last long to keep stimulating the country's economic growth.
Well, we're going to have to leave it there. We've gone over time a little bit, but a lot of important issues to tackle today. Brent crude oil just down from the $70 at 69.24. It's down about 0.5% in early Asian trade today. It would be significant on the eve of OPEC seminar meeting in Vienna tomorrow if indeed Brent was to close above $70 a barrel, from at least the sort of narrow perspective of all of the oil producers meeting in Vienna. It would take a lot of any heat out of any conversations there, one would think. Listen, I want to just take the opportunity to thank you guys for it's the end of our season 24-25 this week. We'll be taking a break for the summer, and of course, a lot of things to keep an eye on here, including, you know, the 6-month review by the U.S. government of the United Nations comes to its conclusion at the beginning of August. When there is a lot of fears that the US could once again defund the United Nations, the main corporate, main headquarters and all of its bodies. They've obviously defunded many agencies already. But so these are the dramas we'll need to watch out for over the summer. But Mike McGlone, Narendra Taneja, and Victor Yang, your contributions throughout this season have been awesome. Thank you so much, always. And to finish with all of you actually on the same podcast, I'm not sure that's actually happened before. I mean, with the serendipity of our 100 commentators every week, it's a roll the dice of who comes up. But the fact that you three came together by simple serendipity is very appropriate at this time. So thanks, guys. Have a great summer, and we'll see you all in September. And please do mark your calendars for our Energy Markets Forum in Fujairah on the 1st and 2nd of October. Have a great day. All the best.
Thank you. Have a nice holiday. Yes.
You too. Thank you.
Thank you.